Elon Musk's crazy announcement about canceling Twitter deal. Elon Musk said he's putting his $44 billion takeover of Twitter temporarily on hold, saying that he wants more details about how many of the social platform's accounts are fake or spam. But what does this hold mean for Musk and for Twitter? Let's find out. A shock announcement. The shock announcement sent the company's shares tumbling as investors questioned whether Musk might back out altogether. The Tesla and SpaceX mogul said he needs to make sure fake accounts do indeed represent less than 5% of Twitter's users, as the company has estimated. Musk tweeted about putting the massive deal on hold early Friday, sharing a recent Reuters news story. He later added a reply stating, "Still committed to acquisition." The Reuters article cited a securities filing Twitter made shortly after the company reached a deal to sell to Musk, stating that of the 229 million Twitter users who saw advertising in the first quarter of 2022, less than 5% were fake accounts. Then CEO Parag Agrawal tweeted that he expects the deal to close, but added, "We need to be prepared for all scenarios and always do what's right for Twitter." Tesla's stock drop casts a shadow. The billionaire's latest tweet storm added to the turmoil surrounding his acquisition of the influential but struggling social media platform. Twitter shares sank more than 9% on Friday to their lowest level since Musk first disclosed he'd become Twitter's largest individual shareholder in early April. The drop comes as tech stocks have been battered on Wall Street amid a broader sell-off. Shares in Tesla, which account for the bulk of Musk's wealth, had lost nearly 30% of their value in the last month as of Thursday's close. On Friday, Tesla stock rose. Musk is relying on his Tesla stake to help fund his $21 billion portion of the Twitter deal by selling some shares and borrowing against others. He's also brought in other investors, including Oracle founder Larry Ellison, the venture capital firm Andreessen Horowitz, and Qatar's sovereign wealth fund to help finance the purchase. The combination of the wider market drop and Tesla's decline would naturally give an individual like Elon Musk cold feet, said Angelo Zeno, analyst at CFRA Research. But it's not clear that Musk would or could simply walk away from the deal. His agreement with Twitter includes a $1 billion breakup fee if he backs out, with few exceptions. Generally speaking, people don't sign merger agreements so they can walk away from them. They sign merger agreements so they can do deals, said Donna Hitcherich, a professor at Columbia Business School. Is it an excuse? Zeno said Musk could be using the question over fake accounts as an excuse to cut his offer price of $54.20 a share. He is giving himself more options and buying himself more leverage, he said. It appears like he's paying more than he needs to pay for this deal. To examine Twitter's estimates of fake accounts. The 5% figure Musk flagged comes from Twitter's first quarter earnings report, which it released days after reaching the deal to sell the company. Musk has said he plans to get rid of spam and automated bots on Twitter as part of his vision for improving the company. The question of fake Twitter accounts has to do with how the company tracks the number of monetizable daily active usage or users, essentially the accounts it shows ads to when people or organizations access Twitter on any given day. The company works to detect and suspend false or spam accounts and to omit them from its calculations of monetizable active users. But Twitter also acknowledged in its filing that fake or spam accounts still exist on its platform. It added, "Our estimation of false or spam accounts may not accurately represent the actual number of such accounts, and the actual number of false or spam accounts could be higher than we have estimated." In its earnings report, Twitter said it brought in $1.2 billion in revenue, including $1.1 billion in ad revenue, a sharp rise from the same period in 2021. But its costs and expenses rose at an even sharper rate, to $1.33 billion, resulting in an operating loss of $128 million. Impact of delay not yet known. Twitter announced the deal to sell to Musk on April 25, saying he would take the company private by paying $54.20 per share in cash after a whirlwind courtship between the billionaire and the social media platform. The company said it expects to complete the transaction sometime in 2022. In his Friday update, Musk didn't provide any other details about putting the deal on hold, leaving it open to interpretation as to how he might postpone or delay the massive purchase. The seriousness of the matter is also an open question, as Musk often uses Twitter to air spontaneous thoughts alongside his concrete plans. Before he tweeted about the Twitter buy, for instance, Musk's previous message demanded, "Stop the war on straws." That habit has gotten him into trouble before. In 2018, the Securities and Exchange Commission fined Musk over a tweet in which he claimed to have secured funding to take Tesla private, which, it turned out, was not the case, according to a ruling from a judge. Earlier this week, Musk said that once he completes the deal, he would reverse Twitter's permanent ban on former President Donald Trump. He called the ban a morally bad decision, to be clear, and foolish in the extreme. What this means for Musk and Twitter. So, in a merger contract, the parties negotiate for certain remedies, right? And so, one of the remedies, and this is in the event of a contractual dispute or a termination of some sort, they contract for remedies. In the context of law, when you sign a contract and then the contract is breached, you can go to court and get a cash remedy equal to whatever your expectation was, with respect to that contract. I did this deal thinking I was going to make $50. You breached the contract. I want to get by my expected profit. That's $50 from this contract. And the judge will award that expected value from the contract. It's really hard to do that in the context of a merger. So, what parties do is they agree, essentially, to liquidate damages. In the event of a breach, well, we're not going to allow one party or the other party to go to court and ask for their expectation in the transaction. We're going to give them something else, and the parties negotiate. And in this case, they negotiated for a liquidated damages provision, a termination fee, in the event of a termination by Musk of $1 billion. Now, that's not the only remedy available. It's one, basically a limitation on monetary remedies. So Twitter can't just go to the court and say, "Court, Your Honor, we were expecting $50 billion worth of value for our shareholders. We want that." All they can get is $1 billion in cash. In the alternative, the company has the opportunity to ask for what's called specific performance. In the event that the contract can be completed, they've met all the closing conditions, and the debt financing is in place, ready to go, the parties have agreed to permit the company to ask a court for an order for specific performance. An order from the court instructing Musk to complete the deal, right? And whether they get liquidated damages or specific performance is at the option of the company, not at the option of Musk. Yeah, so you want to think about this in the context of a kind of a typical private equity deal, which this is not. But in a typical private equity deal, the seller is dealing with, a highly leveraged buyer. And in the event the buyer is unable to come up with the debt financing to make the deal happen, the buyer just doesn't have the pockets to make it work, right? So, if the buyer were just to collapse on the financing, the seller would go and try to get a court order for the buyer to complete the deal, specific performance. But it would really be to no avail if there's no debt financing to support the deal. That's not this situation here, because the debt financing is in place, and that's not really what's at issue or what the concern is. I think the real concern is that the equity supplier, Musk, might just want to say, "Hey, I don't want to put up that much money. I think I paid too much, I want to pay less." And that's not really an argument that's going to cut a lot of water, like having buyer's remorse. And so, it's not the kind of thing that's going to survive much of a challenge. With that, we come to the end of this video. Consider subscribing to join in on our future content.